All right, guys, we're back for another weekly live stream. Me and Jeff on the stream this week. Jeff,
What's going
how's
on,
it
guys?
going, man?
Yeah, so, 5 kids running a real estate empire, the
Yeah.
usual.
You look good doing it, man. It's been great to see you.
I'm shaving more, so
Yeah. Bringing back the James Bond look. I might
yeah,
have
looking,
to I might
trying
have
to
to
be a
join you.
baby.
Yeah. Nice. I guess let's maybe start with some of the news that we've been seeing and paying attention to. Fresh off the press was the provincial government released its budget yesterday, and a couple big key points related to real estate specifically. I think the one that's really jumped out to retail investors and most your average Joe investor is the HST rebate, which can result in up to $80,000 in savings on the purchase of a $1 million home. So they're doing this with the intention of, yes, we're giving you savings, but there's also, I guess, a big home buyer psychology element where it's like, okay, cool, I'm saving 80K on a house now. This is going to incentivize me to buy and maybe will help support construction, incentivize developers to build since demand would be coming back. So interesting, the province is looking to do things to incentivize builders to build and people to buy. But for us, what we've been focused on are the incentives that they've been given us to develop purpose built apartment buildings. And more specifically, we have Foundation Capital Development Fund One. You want to talk a little bit about what we've been seeing there and kind of the progress we've been
Well,
making there?
our current investors and new investors have put their money in the first phase, the first tranche to do our development, and it's going to be between a 250 unit building all the way up to 350, possibly more. We're going to go talk to the city, but that's kind
Mhm.
of the range that we're looking at right now. So it's going to be quite the tower, possibly even 31 stories. Still has to get kind of determined by the cities, but like it's not going to be a little small mid-rise right now. We're talking
Mhm.
change the skyline. So pretty excited about that. And from the announcement yesterday, though, I don't even know if that'll move the needle that much for buyers that are gonna, oh, now I can save on new construction, maybe, but a couple people
Mhm.
will take advantage of that. But yeah, I think for the most part, you're better off just uh, going resale right now instead of doing that. But we'll see if that moves the needle in Ontario.
For sure, man. I feel like in general, whenever things and incentives like this are put in place to foster growth, there's always like a big lag between once you actually see the action. Like, even an easy example to refer to is the 2020 pandemic when they started cutting the rates. Initially, everybody was panicking and things were going
Mhm.
crazy, stocks were dropping. It was only like 6 to 8 months later we would see the impact of those. And that's something as quick as a rate cut. Something like this, where it's an HST rebate, it might even take a much longer time for us to see that impact. But it's another interesting thing was that they mentioned that housing starts are projected to be 64,800 in 2026, which is down from their initial forecast of 74,800. So it's almost the city indirectly is admitting here that housing starts are down and at a much lower rate than what they anticipated. And, right now, with buyer sentiment, they don't think it's a big deal. But down the road, when that supply is not entering the market, is when people are really going to realize, holy shit, we should have been either investing in real estate earlier or developers doing something to contribute to supply. At the end is when you feel that net impact.
Mhm. Yeah, I feel like
Yeah.
a lot of the headlines are just to get votes sometimes. It sounds good, but yeah, we'll see if it actually moves the needle at all.
Yeah.
Um, but obviously, we still have the trust operating and rocking and rolling. And there's a future. We're coming up to the final year-end audit of Foundation Capital Private Real Estate Trust. It's out of our hands now, and we're waiting on the final price bump of the year that we
Mhm.
can give our appreciation to our investors. So if you guys are our current investors, you're sitting out there right now, this is the time to top up your investments because it's out of our hands and it's coming very shortly. It'll probably happen early April here, mid-April, possibly.
Yeah, for sure. the part of the game is getting the audited financial statements completed. There's a lot of compliance with investments of our nature, obviously for good reason to protect both ourselves and the investors. But sometimes, as a result, you end up having to play the waiting game. But like Jeff said, we are excited to see the new unit price. So if you are an existing investor, I would be getting excited too, because that's more growth for you. Slash, take this opportunity to top up your investment and improve that growth. In terms of FCPRET, things have been chugging along well. We've been talking a lot about in the newsletters recently, given the economic condition and the headlines. It really highlights how resilient multifamily is as an asset class, especially in times like this of uncertainty and war, etc. And very simplified, what that comes down to is that people always need a place to live, right, Jeff? Like, they
Yeah.
can stop going out to restaurants and
Oh
expensive
yeah.
luxury spending, but you still need a
Shelter.
roof on your
It's
head.
the Maslow hierarchy of needs, and it's in the private sector in Ontario. There's some government housing, but it's mostly in the private sector. So just a little story that's happened recently. There was a tenant applicant reaching out to the rental agents with a single lady with three boys that were like 14, 12, 10, trying to go for a 1 bedroom. And the application was, I only have first and last month rent. I don't have any other money. I'm in between jobs. And then we're like telling the rental agent, well, they should go for a 2-bed or something. And she had said very angrily, because she was clearly getting turned down at many other apartments across the province, being like, no shit, I should go for the 2-bed, but I'm trying to just not be homeless. And it was a sad little story here, but she was going to put three almost teenage boys in a 1 bedroom just to kind of survive what the economy right now, not caring about the square footage, just
Mhm.
get in. So there's like this bottom half that they're trying to get these apartments, and then we generally provide the affordable apartments. We're not going after $2,500 rent. This was like 1450 kind of rent, which is like
Mhm.
pretty standard for a 1 bedroom in Ontario. So yeah, just like that demand that people need. They're trying to like figure it out right now, but they don't have jobs. It's not a safe tenant to put in due to how the Ontario Landlord Board works, because of the
Mhm.
moment they get in and they don't pay, it's like 1 year before you get them out. So you have to be very careful on application who you put
Mhm.
in. But just to say, like, the demand for an apartment. So we're getting all apartments rented. We're putting in the proper tenants with good jobs, good credits. Because it's almost like you're applying for a job to get the apartment. That's what it's
Mhm.
like. So,
Yeah,
anyways, we're just doing our due diligence, making sure that we get the right tenants for our investors in there, because there's no point of just taking first and last and then never getting any more money, and you got to go to court. So
for sure. And
it
the
happens,
opportunity
but
cost.
just
Yeah,
yeah, the demand that's out there right now.
right. And it comes from the experience and the systems and processes we have in place. It's why professionally managed apartment buildings, where you get this wealth of experience and you get that peace of mind that you don't have to worry about being put in these types of situations. Or even if it does come, we know how to handle them and keep the
Yeah,
portfolio chugging along.
you got to remember, I've been doing this since 2012, putting in student rentals, all that stuff, onto now other just normal tenants and duplexes and triplexes, and now you do it across a giant portfolio. It's the
Mhm.
same principles, but now you're just doing it at scale for our
Yeah.
investors to profit and not have to deal with any of this stuff. So
For
yeah.
sure, Jeff. And that story you just told is a testament to what's happening in our core demographic, which is core housing. I think that's
Hmm.
the best way to describe it. We service that demographic that makes between 50K to 75K a year in income, sometimes even lower. Another way to look at it as $25 an hour. And in that demographic, there's still very much a housing shortage happening. There's not nearly enough supply to meet the demand for these people, which is why they're having a hard time finding apartments. And stories like this are happening, where even, I'm sure, if that woman did have good credit and things like that, she might not be getting turned out as much, but the amount of apartments available for her is still nowhere near where it needs to be. So because of that demand, we'll continue to see these apartments grow in value and become a more valuable asset class as time continues.
Absolutely.
Yeah. The other thing to also note on how we generate equity through FCPRET is the value add strategy, where we're buying units that are previously being rented at low amounts, generating low net operating income, going in there, fixing those units up, renovating them, and generating a much higher net operating income, which improves the value of the building. And the reason I mentioned that is I get a lot of investor calls or potential investor calls, and they quickly understand the 7% cash flow distribution. It's coming from the net rental income of the buildings, paid
But
on a
how do you
monthly basis.
appreciate?
They get that, but they're just like, what the heck is appreciation? I don't understand that. Is it a share? Is it a stock? How does it work?
Mhm.
So really quickly, our existing investors know this, but if you're someone on the newsletter and you're not as familiar, when you invest in our funds, you're subscribing to units in the fund. Think of units like shares, but the Ontario Securities Commission doesn't allow us to call them shares. Your units in the fund, you purchase them at a certain price. Right now, our unit price is $13. As you mentioned, it's going to be going up soon as the audit is completed, but you
And we
purchase the
started
units
at
at,
$10,
yeah,
just so
yeah.
people kind of understand.
Exactly. So ton of growth there. So you get your 7% paid monthly. And then that 13% price over the term of a year, we target at least 8% in appreciation for a total return of 15. So that's how that works. If you want to know more, have more specific questions related to that, make sure you click the link in this email and reach out or book a call. You guys know where to find us. That's it on the FCPRET side. Development's chugging along. I know we touched on it briefly, but we're consistently evaluating options to speed up the construction time and try to beat our 4-year timeline. However, nothing is guaranteed, and it's good that we're just having these kind of conversations to make sure we can find efficiencies for our investors.
And if you missed development one right now, the 24 to 27% returns, reach out to us. There might be a development two in the
In the
works.
works, in the works.
So send us
Exactly.
an email.
For sure. All right, Jeff, we're going to sign off here. Have a good one, guys. We'll see you on the next one.